got a debate. We've got CPI, we've got PPI, we've got contract roll, and we've got corporate buyback blackout on deck. On top of OPEX after that. A whole lot to talk about this week for Weekly Outlook of Markets and Profile for the week of September 8, 2024. So with that, let's spend the next 10 to 15 minutes or so looking at the week ahead and seeing where we might find some opportunities and use the profile to help kind of shape the narrative of where we're looking to be active. My name is Josh. I'm founder of Trade with Profile. We're a skill development firm, so we come alongside active developing traders, specifically in intraday futures, but use the profile as the basis to form a narrative so that we can look for playbook opportunities. And we're going to look at NASDAQ, ES, Russell, and crude, as well as anything else that potentially looks interesting as we go along on the way. So as we begin, we're going to start by looking at the calendar this week and what do we have in play. So Tuesday, we've got the debate, which is for the presidential election, maybe the only debate that they have. And so there may be some moves off of that, just something to be mindful of. Not typically a market mover, but it's not a typical election year. So be on the lookout for that. The bigger idea of things that we're watching for this year, or this week, is going to be the CPI on Friday, CPI on Wednesday, and then we've got PPI on Thursday. All right, so we've got CPI and then we've got PPI. And then on Friday, you'll start to see a shift in the split of volume between the September contract and the December contract in equities. So we'll begin contract roll. We won't complete that until next Monday, but that's something to be mindful. And then in terms of like where we are and our overall roadmap, and this is where the corporate buybacks come into play. So as we look at where we are from the S&P, okay, as we are moving lower. So we're looking at the SPY here because we don't have to worry about contract roll and adjusting prices. We can just purely look at the product. What is happening is that we're starting to see an increase sustaining in tail risk, meaning that there's greater concern on a broader base, even though we've just about gone back about 5%. That's about all we've done here from the highs again. We got back to the trailing VWAP from the low from the last time we touched the year-to-date VWAP, and we are moving lower. Now, notice how the entire VIX curve has been starting to tighten up and move higher, although we are all over the map on the short term. So we actually, Friday, had a pretty big down day on Friday after non-farm payrolls. We'll talk about that here in a second. But we actually went home without a lot of movement. In fact, we didn't see a whole lot of movement in skew. So I don't think the downside's done. In fact, I would say we're going to look to follow the Q road. Okay, so I'm watching right now as the Q has moved back in this form. So 440 Qs is a nice spot for us to test and kind of pause for a second. I wish I could say I think that's the low. I don't think it is. I think we're gonna have to get the SPY or the VIX curve completely inverted, and you have to start thinking through, okay, what are the catalysts to lead to higher prices? What is there to buy? And we've actually been sustained for the last number of bit by corporate buybacks, where companies go and buy their stock back, and that happens periodically. We're actually coming into a buyback blackout window. So there are windows where companies can't buy their stocks back, especially as they're going into earnings. So we're going to get ready to start releasing earnings here in a couple of weeks. And so there's blackouts, which means that dries up demand to buy back stocks. So this is another one of the reasons why September can typically be a seasonally weak month. You've got triple witching OPEX, which is coming up next week. You've got this blackout here. We're in an election year. There's just a lot that says stocks can continue to move lower until we get an understanding of what's going to happen out of the election. So we're staying to the idea, at least towards that 440 in the Qs. What does that translate in terms of like other prices? We'll look at that here in a second. With that, let's just look real quick at what the quick sheet looks like. Any key changes in posture. So pretty much buried it into the week. Change in posture, pretty negative. So we're in extreme posture, lower in NASDAQ, ES, Russell is equal to the 5-day, but you can see lower trend days all around. Crude, as well as energy, moving lower. Metals moving lower. We did see a movement higher in treasuries, and currencies lower, commodities lower. Okay, and you can see here on the days to expiration, we're starting to get closer to some of these, in roll. So be mindful of that. The first thing that I would say about coming into this week is just to be aware that we are pushing near the or below the monthly expected lows. So we're not even halfway through the month and we're already pressing these prices. So be careful about getting too bearish and trying to push that when we're already below those prices. So especially when we're in the middle of the month, we pay attention to when we're seeing expected ranges like that. So we're coming in an extreme posture and below the expected lows. It's a great place to get caught getting too bearish early in the week. So definitely be looking for responsive buying before we start moving back lower. Okay. So with that, let's start looking at some of these products. We're actually going to start with the NASDAQ because I do want to talk about the fact of where the NASDAQ is relative to some pretty key references and movement. Okay, so I want to look at a couple of different anchored VWAPs. So this one here, that's Jackson Hole. Okay, this is the last non-farm payrolls from August. This is last week's jobless claims, and this is non-farm payrolls from September. So we're now below all of these key kind of policy statements and movements since last month. And I would say as long as we're below those prices, that's not supportive to buyers. Could easily see movement back up to test these, but unless you can really get above 19,100, it's a dangerous place for those looking for tech. Okay, and on top of that, when we look at performance, NVIDIA gives and NVIDIA takes away. So semiconductors last week were the big drag on markets. Chief among them, NVIDIA. So that's unless that turns around. Now, it could turn around. There could be people looking at that as a buy. If that's the case, great. But this is also demonstrating just how much of an impact we've seen of these products around what's happening across equity markets. I mean, they're really driving the story. So all that to say is we go back to looking at the NASDAQ and what are we looking for this week, okay? We are expecting about 700 points this week. Now, where do we start the week? We're looking at monthly profiles here. So we're very much inside of August prices. You can see 5-day, 20-day, 90-day inventory and prices here. So this is what I mean by an extreme posture. I'm really cautious about lower prices early because that's just going to stretch the inventory out and likely lead to snapback. So if you want to look to the short side, you want to see either sideways trade to pull the 5-day lower, to have value follow price, or you want to see responsive early trade in the week that then rolls over later in the week. Okay, I think those chasing short early in the week are going to get punished. We're in what's called a Vanna week, so it's if we don't see a lot more put buying coming in, early in the week, then we'll see these flows that'll lead us higher at the end of the week. Looking at a weekly basis, okay, here's the big push from the 5-day on Friday. I do think it's very possible that we will balance lower to start the week, unless we can get above 18,700. Then we could go back up here. Again, early pushes back towards last week's most traded price. Think lead to lower prices. If we push lower early in the week, look for the snapback. All right. So weekly expected low, 17,944. We've got last week's point of control as kind of the key reference, and we're significantly below that. So if we can't make new and hold new weekly prices, watch for the auction to push back toward that 18,943. If they're able to hold above that, we could move back here. What's more likely is that we could get back up here and balance enough to pull the 20-day lower, right? And if we get really concerned to the downside, what are areas we're looking for? We're definitely looking for retests of the August lows. Okay, so if we hold below last week's most traded price, you can see we've got some composite references here around last week's low, and then we're looking towards around 18,100 area. Okay, those are areas that need to hold. Otherwise, we could push and challenge for the August lows. So just be aware of that. Markets are emotional. One of the chief and most trustworthy fundamental in markets is human behavior, and if it gets gets rolling, we could definitely see some roll to the downside. Okay, but at least we're starting with a extreme posture. So be cautious about shorts early in the week. I want to see some acceptance at lower prices before we would try to do that beyond that. All right. Now let's look at the ES. We've definitely rolled off inside of August prices. You can see that the key node down here, that's probably the chief objective. That's the 5350 area. We're below 5-day, below 20-day, and 90-day inventory. We're also in extreme posture in the ES. What are we looking for? We're looking for about 190 points this week. That could easily get us toward the 5350 area, as well as 52675 and a retag of the year-to-date VWAP. So that's all within play. Could happen. Again, because we're in extreme to start the week, be cautious about early pushes lower. Look for responsive trade or balance to happen first before you look to express lower. Early rallies are likely to be sold unless they can accept back above the 5-day and change posture. And then if that's the case, we could balance until we pull here. So if we push lower early in the week and then get back, look for the push to here. If we push higher in the week, watch for failure later in the week. Okay. Again, because it struggles to find the narrative that's going to get us right back up there, particularly because going back to the VIX curve, we just don't have enough inversion and fuel to really rocket us higher. Okay, so if like similarly back here at the beginning of August, if we can get this curve like that, as we push lower, I do think that just naturally leads fuel higher. But until we have that, we're vulnerable. Okay, so be mindful. All right, Russell. Okay, Russell had the big push in. We're looking at monthly chart here, so it pushed higher in July. That failed. August back here. Now in September, we're pushing in. Seems like we're on a path back toward that 2050 area. We did a good job of pulling the 5-day lower. We're balanced there. We left the 20-day. We're looking towards the 90-day. So unless we can get back above, move back towards 2150, path of least resistance is back to 2050, and ultimately that's going to lead us lower. And why do I believe that? Because you had a push away from here, you come back to value. You push away with a lower high, back to value. Could have another one, but eventually we break. Is how that plays out. Unless you can get above and make a new high and hold and accept higher, the path of least resistance is to the downside. Okay, so as we come into the week, balance with the 5-day, watch, expecting lower prices, watch for a push toward 2050. Now, if we go to 2050 first, I would expect some responsive activity. That could go take us back up here to 2100. And if we get early buys, watch for sellers step back in around 2150 and rotate us lower, ending the week that way. All right. And then finally, let's talk about crude, and then we'll just look at some other ancillary products out there. In fact, I'm going to go to a much longer chart for crude, just to give you an idea of what specific things we're looking at. We're looking at revisiting the lows of the year. Okay, so 75.82, most traded price last 2 years. We are pushing lower from balance to start September. It's a seasonally weak period for crude oil, so we can continue to see a drift. I think the next area that we're looking to test is going to be those lows. So watch 66 to the downside. That's a key test area. Let's get back to the weekly chart. Okay, one time frame lower for the week, broke out of balance. We were in a multi-week balance. We broke out of balance. We're not able to get back above. So what are we watching? We're watching 70 as the key reference is the 5-day, looking for new weekly lows. If we make new lows early, hit that 66, watch for a rally back up here. If we push higher early, then look for the failure towards 66 later. If by some ability we're able to get above 72, then that could shut off the downside auction and return us back toward composite value higher. Okay. So finally, as we just look around for some other product ideas or potential product ideas, kind of a new bearish posture in silver. Keep an eye on treasuries, balance with the 5-day, but above the 20-day. If they break lower from that, then they could be in a balancing and start moving lower. Balancing in ag, we do have a WAS report this week, and overall, looking for lower prices. You can see all the trend lower, normal lower days, looking for lower prices in the RTH session to start the week for a lot of these products, and then we'll kind of see. Okay, so we'll just have to kind of see how that all plays out. Again, as we get into the week, just a quick reminder that we are talking about narrative, which helps us set context for what playbook trades may be in play. So all this idea of potential price ranges and things on the quick sheet, that's all to help us look at, okay, what are the likely scenarios as we come to the market, but doesn't say what the trades are. So as we're looking for trades, we're looking for 4-question opportunities. What's a 4-question opportunity? What is the opportunity or the target? So that's a key value using the profiles to, like, where do we think price is going to go? What am I willing to risk to get to that price? What would tell me that I'm right? What would tell me that I'm wrong? Those are the 4 questions, and it's my belief that if you don't have the answer to those 4 questions, you don't have a trade. If you'd like to learn more about those questions, you can. On our website, I've got TRADEWITHPROFILE.com/4 questions. There's some examples of 4-question trades you can take a look at. Be sure to follow us on Twitter as we update daily outlooks throughout the week. If you want to schedule a one-on-one, we set aside time every week for just free consults, conversations with traders. Happy to give you some perspective and concrete next steps for where you are in your development. If you do want to do some specific development, we encourage you to take a look at the pathway as a way to build a fundamental understanding of markets around the profile. Okay, thanks. Hey, hope this has been helpful. Appreciate you spending a little bit of time watching this. Love to hear what's helpful, what's insightful, and how we can get you on the right side of the trade. We'll be back tomorrow with the daily outlook for the next day, and we'll be with the new weekly outlook at the end of the week. Take care and trade well. Peace.